Okay, welcome traders, welcome to the Key Equity Hedge website, and I'm just going to give you a brief introduction as to what this system is and what the company is. So again, thanks for your time, and this will only take five to 6 minutes, so I hope you enjoy. I'll just give you a history of the company, and the system it's established by myself, Luke Ferguson, from Key Equity Hedge and Key Equity Fund, which is the father company of Key Equity Hedge. We've got a mix of professional trading and experience through private equity funds and system development over a 10-year period. Key Equity Hedge is business partners with Global Market Trader and Avestra, which is a system providing company, and Avestra Fund Management. So it's the aim of this system and this company is to give private wealth traders, private traders that are trading private accounts, a chance to trade an institutional system that actually works, so you can get your hands on something that the big players are trading with. We provide an opportunity to give you consistent monthly returns, but the focus of that is to manage your risk and minimise any major drawdowns that options traders generally experience. You can manage these trades for as little as 10 minutes a day, so it's good for the travelling trader, and you can have your accounts managed by professional traders at Key Equity Hedge. So a bit of a history about the system before it's been able to become public. It was traded in a private equity fund over a 7-year period, including the disastrous 07, early 08, which it passed with flying colours, simply because it's got that hedge factor to the system, which I can get to in a minute. It's a combination between options strategies and a futures strategy. So we trade the S&P 500 and also hedge with the underlying futures market, which is the S&P. So a bit of a history about options, if you're not familiar. They can vary from low risk to very high risk, depending on what your risk portfolio is. And options traders generally, or historically, have been traded by institutional traders. And it seems quite high tech, but really, if you scale it right back, it's not high tech at all. And they've always got the argument of buying versus selling options. And with our experience of buying, we tend to think is difficult. Options traders that the selling options have an edge because of the time decay. Options lose value at an increasing rate as they get closer to expiry date. So that's all common knowledge for your typical options trader. But if you don't know that, well, now you know. And the CME will always say that 75% or thereabouts of all options expire worthless. So selling options give you a clear edge. So we've just had to come with a strategy which allows you to hedge against those disastrous moves if you're just trading without protection, which we have here. So the Key Equity Fund allows you to own your own business. You can trade from home. There's limited overheads, as you know, with trading, and you can make a profit on a monthly basis. So it can generate your income with trading your own private account. You set your own hours, and you can be your own boss, and you can be part of that 10% that succeed in trading. And a bit of a small little recap of the strategy. We combine, we sell options and we hedge with the futures on the S&P 500. So the futures hedge protects the options positions, and then that way we can take advantage of the increased premium when there's volatility in the market. They're non-directional spreads. We can generally generate smooth returns, and we're consistently profitable. So we hold our positions regardless of the market direction because we've got that futures hedge, which is the key to the system. So the advantages for you to own a Key Equity Hedge system is you're trading an institutional system and as a retail trader, so very rarely do you get the opportunity to trade what the big boys are trading, and it works in a bear or a bull market. It doesn't matter. We've got the luxury of having an earn while you learn account, which is a managed account, which is managed by professional Key Equity Hedge traders. Now that gives you the opportunity to just relax and learn the system, knowing that your capital is making a profit each month. So then when you're comfortable to trade the system and you've gone through your modules and you've learnt the system, well, then you can take the reins on your account or start a new account and trade it for yourself. That opportunity is there as well. So that's an option you do have. So that really takes the pressure off in those early stages of learning a new system. So then you can make an income passively without that pressure. So how do we select our spreads? Well, we take a delta of 5 to 12 depending on what your risk portfolio is and typically the market condition. That again is tailored to your account size. So depending on what account size you're trading, we'll tailor the option spreads to suit that. Generally the option spreads are no longer than 70 days. And it's very simple. The summary of the system is it's short-term options. We collect premium by selling options, and then we trade the underlying futures market using a Key Equity Hedge futures indicator. So that protects the options positions. So that's on the S&P 500. And we generally hold the options positions until expiry and just hedge with the S&P futures indicator, and we make profit consistently when those two strategies are blended together. That's why it's called the hedge. So without getting too technical on the options, let's just have a bit of a look at the ratio or a condor spread as an example. So these are typically shorter term option spreads. So this is a typical spread which brings in about $5,000. So typically a option spread will have your sold calls and your bought calls, and your sold puts and your bought calls. So there's your underlying market. So you've got your options positions above and your options positions below, and now we have a futures indicator which hedges in between these lines until the expiration of those options. So the key feature of this hedge is if the market was to rally up, well, we've got the futures indicator to hedge against these options trades. So the futures indicator itself makes a profit, so that will make you money, and it'll also hedge and protect your options trades. And the question we get a lot is, how do you receive a premium? For the traders that aren't quite familiar with options spreads, because they've been scared away by too many stories of people blowing up accounts, simply because they don't manage the options trades correctly and they don't have a hedge. So you need that protection when you trade options. That's a given. So when you set or place an option spread, you receive a premium or a credit in your account, and that becomes an unrealized position until the expiration period is over. And to keep this credit, your market, or the market, the S&P, needs to expire below our sold calls and above our sold puts. So that's within those strike points, which is here. So you need the market to close on the expiration day between the two red lines to get the maximum premium. Now over the period of since January 2009, which is the most recent trading spreads, we've been tracking a couple of accounts. So the typical account size is generally between $100 and $1 million for people that are coming to trade options. So we've been tracking this in real time to give traders an idea, and some of our members have tracked very close to these figures. So it's generally above 50% so far this year, with 2 months to go into the Christmas period. So that gives you an idea of where we're at. So it is a great returning system, again, because of that hedge factor. So when options trades do go against us, well, we've got that hedge to still make a profit for the month. So we're looking to bring on the Dow and the major currency pairs in the future, but for now it's the S&P 500, both E-mini and the large contract. And the price point for the Key Equity Hedge is $9,990, and there's a monthly membership fee to get the updates on the spreads and any changes, and that gives you your coaching and mentoring, which is one-on-one to set your spreads, and then there's support 24 hours. So it's a great investment for a system which consistently returns. It doesn't matter what the market conditions are. We'll tailor the system to your account size, answer any questions, and be there for full support. So the system includes, again, full support from a professional Key Equity Hedge staff member, which is also a trader, So all of our staff members are full-time traders trading managed funds. So you get the lifetime ownership of that key futures indicator, which is the backbone of this system, and access to, or you've got the option to put some funds with the Earn While You Learn account, which is a managed account trading this system. And in the website you get the daily updates on the futures and the options trades. You get a list of historical results, and this is where we give any updates to the system or any major announcements will be put on the website. So that is the Key Equity Hedge system in a nutshell. Feel free to go and have a look at the YouTube videos on some more explanations and some recaps of the market over the 2009 period. You'll find that link just below this video. So the contact details are in the YouTube, or you can email admin@keyequityhedge.com. So thanks very much for your time and enjoy.